Great week last week for pretty much everything, but I'm not really sure what's changed. What's your take?
Hi, Brian. No, indeed, I'm not really sure what's changed either. And all eyes will be, well, there's a lot happening in this coming week. It's a very exciting week from a data perspective. All eyes on the Fed, because right now, monetary policy is really dictating how markets are behaving. And all eyes to see how the Fed continues its hawkish path.
Do you have confidence in the U.S. Fed, the European Central Bank? I mean, I'm sorry to say it, these people that we put our trust into and we give the headlines on CNBC every day, they've been wrong about everything.
They've been totally wrong. But what ought to be said is the Fed is very serious about building back its credibility. And if you look since the June meeting, in fact, the major culprits of pricing pressure, be it wheat, corn, oil, etc., these are all down double-digit territory. And I think the most remarkable of all, which is the most remarkable of all, is that long-term inflation expectations have come crashing down. Look at 5-year break-evens. Market participants are anticipating that inflation is not actually that much higher than the 2% goal in the US. The ECB, Europe, is a different ballgame altogether.
Yeah, I mean, and with all due respect to, say, the Treasury Secretary Janet Yellen, we gave the headlines at the top of the show. She's saying, oh, I'm not really that worried about a recession. With all due respect, she's a multimillionaire living in a Washington bubble. I mean, she's not out buying gasoline and groceries in central Ohio, or for that matter, central Netherlands, where you are. It just feels like what we're hearing from the folks that we are, quote, relying on, Annika, both there and here, your energy crisis. I was there last week. For years, people said, don't worry about it. Guess what's happening now? And it feels like the markets are reacting to just that, or maybe I'm just jet lagged and cynical, Annika. I don't know.
No, but I think the cynicism is well grounded, and we need to get real. The pain is real. And, referring to Europe as mentioned, we believe that Europe is just going through a perfect storm, right? You've got too high inflation. You've got an energy price crisis. You've got a risk of a sovereign debt crisis. And to top it all off, you simply lack a runway of monetary policy ability to act upon this. And I think that the US, the Fed, I mean, you could argue the head is hiking from a position of strength to a certain extent. There are strong labor markets, etc. Europe is in a different ballgame altogether, right? I mean, there are certain characteristics that are very specific for Europe than there are in the US.
Well, as I said when I was there last week, it felt like 2009 with an energy crisis thrown on top. But that said, let's be optimistic. It's the beginning of a new week, Annika. When all the headlines seem bad, when everything seems the worst, sometimes that's the time to buy stocks. Is it not? Is now that time?
Well, that's what we've seen over the last weeks. It's amazing. So PMI slipping below 50, bad news everywhere, and stocks were going higher and higher and higher. So, is this a bear market rally? Is it that stock markets, have already seen enough and it's about the incremental news flow? That's why the earnings season is so important, because we all know stocks have sold off. We all know you've seen a massive multiple D rating. What we don't know yet is to what extent stocks have really sold off from an earnings perspective. And we discussed last time, earnings expectations have held up remarkably well, surprisingly well. And that's going to be tested in the coming weeks.